Good morning, UPBOptionMillionaires.com on Tuesday, January 5th, 2016, the second trading session of 2016. All those prognosticators out there calling for the market to go down or up. Guess what? They're right so far to start the year. Congratulations. We were down big starting this trading session on Monday on the heels of China, actually halting their stock market down over 7%. And we found our bottom after the opening bell an hour and a half in. Started to sell off late in the trading day, but guess what? As we've done throughout the last 6+ years since the financial crisis in 2009, we started to rally exactly a half hour before the closing bell. Short squeeze, whatever you want to call it. It's been such a popular action over the last 6 years that there's a Twitter handle. Got quite a few followers that actually call this move, as he's called pretty much every other move off the lows at 3:30 p.m. Eastern Time. We had a $2 move off the lows, 199 in the SPY, went over 201 to where we closed, continued onward up near 202 late in the after hours session. But guess what? We're pulling back now. So let's look at the SP 500 futures here real quick, and you can see exactly what I'm talking about. We had this beautiful move up late in the trading session. Look at this recovery. Look at these candles here. And then we're starting to retrace a lot of those gains, actually heading near the lows at 10 points off the lows that we saw, again, an hour and a half into the trading session yesterday. One thing I wanted to bring up is the Monday action. I brought this up yesterday near the lows on StockTwits and Twitter, and you can see Mondays have been pretty negative for the market, but guess what? Into the middle of the week, it's been pretty bullish. So if you get into the lows on a Monday, buy the dip. By the middle of the week, you're doing pretty good, and that's when you want to exit positions because we start to fall again. We fall down into the Monday lows, and then it becomes a buy the dip experiment there that heads you up to the middle of the week, Wednesday, and a little bit of Thursday before we pull back into a Monday dip. And we had a similar action heading into New Year's. Beautiful move up to the middle of the week, and New Year's Eve, we start to fall. We had a late day decline that continued on into the Monday session. So here we are, another Monday. Nice recovery rally. We're still 10 points off of it. We've recovered a lot of those 3:30 p.m. Eastern Standard Time gains. Where is the market headed here going forward? So a couple things to watch, and I've talked about this in my 2016 predictions. The U.S. dollar index, you can see it started off the day yesterday a little weaker, but then started to rally. And you can see the move we had again. Look at the weakness we had. Now we had a spike up as the market opened for trade. Continuation, we were up to the resistance we saw a couple weeks ago, just slightly breaking below it, above it here, which brings us up to the early December highs, which Mario Draghi talked us off of. Over the $100, the triple digits for the U.S. dollar index. U.S. dollar, again, as I stated before the year 2015 started. Now we're in 2016. A similar type action where we're going to get this parabolic move. And you look, 2015 started, parabolic move to triple digits. 2016 started, we're going to break this consolidation phase. This is going to break us up to a 14-year high for the U.S. dollar index. A lot of people think the U.S. dollar is going to fall this year. I don't think so. I think we're in the early stages of move that's going to get us up near the highs that we saw back with the internet bubble. So that's something to keep an eye on. Of course, stronger U.S. dollar is going to weigh on a lot of things here in the U.S., namely profits for corporations, multinationals, which is going to drag down their stock prices. Also, look at interest rates. Something I got into yesterday, a theme I think is going to play out throughout the year. The bond market, I think, is going to pull back. We're going to see bonds sell off, and TLT started the trading session yesterday significantly stronger. Look at this, 122.44. Got us some puts, and look at us just melt lower throughout the day. I think bonds are going to sell off this year. This is going to be a great trade, so we're going to have the 20-year Treasury note sell off here, the TLT. We're going to have 30-year sell off. We're going to have the 10-year. If you pull up a chart of 10-year futures, I brought that up in my 2016 predictions as well. It's on the cusp of a breakdown. So when we get bonds pulling back, the U.S. dollar rising, it's setting up here this market for a significant move to the downside, and I think ultimately it's going to head us back down to the August lows. If you look at S&P 500 futures, pull up a yearly chart, and you can see we're starting to break through. The support line would be down here. If you draw a trend line across at about the 1990 level, we break through that. That brings into focus the August lows, which I do think are going to get hit at some point. For now, though, the action here early in January could stop here. If you draw a trend line across, could stop at the support line. We get another bounce, and we get this jagged kind of up and down action that's been somewhat of consolidation. But if you look at you go back to 2015, could not break out after we hit our highs. We've been putting in lower highs ever since, so that's something bearish to look forward to. Also, we can pull up some charts here from some of the bigger stocks in the market, namely Apple, the largest corporation in the world by market cap. What a recovery! And that 105 level is so key. And if you look back here for the last 5 years, some significant moves off the lows. We had the May 2013 moves. Off the lows, everybody thought it was the next Microsoft, dead, boring stock, and we moved over 100% from that level. But now we're putting in this wonderful head and shoulders pattern, and actually haven't adjusted this chart in quite a while. But if you look at the action that we've seen over the last couple of years here for Apple, namely in 2015, and you can see this head and shoulders pattern starting to come to fruition, much like FCX. Now, if you go to FCX, it took a while for that to come to fruition, a couple of years. Here in Apple, we have this extended shoulder breaking down now, and if we get through this 105 level, we're setting up for a move back into the 80s. We're coming back from where we started from. When you look at FCX, if you look from a long-term 10-year chart, you can see what I'm talking about, where we had this head and shoulders pattern. Took a little bit. We got rejected here at the neckline. Started to rally a little bit, but again, breaking down through lows below what we saw in the financial crisis, 2009. So Apple, I'm not saying we're going to have this collapse. It's going to turn into a penny stock. But what I am saying is that this is a wonderful topping pattern here playing out for Apple that is going to break us down into the 80s. If you look here over the next couple of weeks, you want to see QQQ over the 110 level. Okay, we're at 109.50 after the bell yesterday. We got over 110. We need to get back over that level, or we're setting up for a move under 100. You look for the short term here. You can see the rejection we had here just at resistance, and we're going to break us down to the 100 level if we can't get back over 110. I know that if-then thing, that's what we like to see with some of the bloggers out there go, hey, if-then, there's no conviction. There's no conviction in saying, hey, I'm going to be right no matter what because I said, hey, this is what we're going to do. But if you look at IWM, same thing here. If we can't break above the support, looks rather bearish for a move back down to 100 for IWM. And you look earlier in the year, the 120 level was key, and we came back to kiss it goodbye. Just like I think we're doing here for Apple. We kissed the Apple 105 level, kissing it goodbye. We could not break through it, got rejected. You can see we're, pretty nasty candle here. It's probably going to set us back down to the $100 level for IWM. And also weighing on the markets is crude oil. Everybody talked about crude oil even at the start of last year because we were breaking down over a year and a half ago. It started in June 2014. Crude oil has been breaking down. And you can see the move we had recently. We are off the lows here. And if you draw a trend line across, we hit support, look like we're going to bounce. But now setting up a nice bear flag. So if you look at crude oil from a 20-year weekly chart perspective, I draw this trend line across as I've done in the past. We've broken through that support line. Looks like we're going to break down in the 20s. That is pretty crazy to think about when back just a mere year and a half ago, we were supposed to break up to 140, 150 and possibly take out the highs we saw just before the financial crisis in 2008, which is also going to weigh on energy, XLE. Now, if you look at the stock market, SPY, QQQ, IWM, we have these wonderful charts over the last 5-6 years off the lows in 2009. Wonderful moves to the upside. We've had pullbacks along the way. But guess what? The trend was not broken. But well, guess what? XLE, trend is broken. And this is something similar we could see with the SPY and the QQQ, where the trend finally does break and we start to just melt down, a methodical sell-off. And you can see the similar action here for XLE. We've held the 59, 58 level. We're back up over 60, but it looks rather bearish here. And we're going to revisit at some point these 35, 40 price levels from 2009. Pretty crazy to think about even here. But it's not all negative, nasty action here. We have a stock like Macy's bouncing yesterday. Macy's down over 50% from its highs in the middle of 2015. Looking for a bounce back up to the $38, $39 level. Maybe get a little more constructive there over the 40 level. Possibly filling that gap down that we saw, its earnings gap, back in November. Another stock to watch, GME, heavily shorted name. Trying to get back over this former support level, now resistance. We break above it, could get back into the 30s. Urban Outfitters, another corporation here, trying to work its way off its lows, was up yesterday, trying to get back to the almost $28, $29 level here for Urban Outfitters. How about FANG? FANG certainly did not perform well yesterday. Look at this gap we saw. And I think all these gaps at some point before we resume our decline, and you look Facebook, natural support here at about the 95 level. Like to see that gap fill. Google, off its all-time record highs, just hit a couple days ago. Another gap here that's likely going to get filled. You could draw a trend line, came through at support. So let's see if that gap gets filled. In spite of the weakness that we're seeing this morning, Amazon was just destroyed yesterday. Down almost 6% into the closing bell, was down more than that. Down, 628 was the low. And if you draw a trend line across, that brings us back to the lows that we saw in November. Remember that? I believe that was a Friday. We had a significant move to the downside, and guess what happened after that? A beautiful hammer candle. We had a nice move up of the $40 variety, and then hit new all-time record highs just a couple days ago. So let's see what happens with Amazon. On the flip side, we do have this gap here from its earnings in the mid-550s. Netflix also very weak yesterday, down almost 8% at one point. Recovered a lot of those losses, got back to 110. That's another gap that's going to have to be looked at for a fill at some point. But if you draw a trend line across, it's got a little more work to do before we can get bullish on the name. Analysts yesterday was a lot to blame for the selling, saying, hey, like we've seen when it was a $30, $40, $50, $60 stock. Actually, even before the split, that growth is done for Netflix, and that is something to be concerned about, as a lot of the price per share is based upon future earnings growth. All right, UPBOptionMillionaires.com. So let's look at S&P 500 futures. We have the market still in pullback mode. Absent that last 330 blast to the upside and subsequent after-hours action, the market would be a lot lower than it is now. And you can see we had that big bounce. We're fading back. We're still off the lows of yesterday. So it's going to be an interesting trading session if you just look at the last 3 Mondays. Mondays have been a good buy point, and that has lasted to the middle of the week. If you look at support here, we've got a little bit more to go. We find support. We could bounce, as we've done previously, off this level. So a couple things to look for positively. It's just a matter of timing it right, and we'll see if 2016 takes the shape of another spike before we pull back to the lows that we saw in August, or is this something constructive, some sort of flagging pattern that's going to send us up to new all-time record highs. UPBOptionMillionaires.com. See you in the chat room, everyone. Have a great trading day.